What's going on, guys? Dustin right here on how we're gonna get to 100%. So today we are gonna talk about smashing the like button, turning on your post notifications, and please subscribing to my channel if you're brand new, because we are gonna get to 100% together, right? Mind, body, bank account. So today my video is gonna be on the interest rates. How can we possibly not pay the interest rates that we have today? How do we get around it? Is there anything we can do? So, as a real estate professional, your real estate resource, I'm gonna let you know what options we have to get around paying high interest rates in this market we have today. So stay tuned, because we're gonna get right in to the video.
I'll make a brand new start of it.
Okay, so today's interest rates are somewhere around 6.5%, maybe 7%. Each person's individual file shows a different interest rate because everybody has a different credit score. Debt to income ratio is different, right? So how do we avoid paying those high interest rates? It almost seems impossible, but the first step is to talking to your lender, right? I would always advise in the real estate business, you don't just find a lender who's nice and smiles and brings cookies and all that good stuff. Well, that's great. You need to get with someone who's savvy, right? Who knows the ins and the outs of the real estate business. And what I mean by that is, when a market shift happens like we're in today, you need to have someone that's very educated on things and options to provide to your clients. And what I mean is, a lot of your lenders, right, sometimes may miss something if they're not in the game 24/7. So first things first is you have to get a lender who knows what they're doing, is very sharp at structuring a loan, and very sharp at finding options for the buyer. Because in real estate, you must have options to make a buyer or a seller make a decision, right? So what you can do, the first step is, right, you see a home you like, no matter what the price is, and you're financing it, but the interest rate is a little too high for your comfortable monthly payment, right? So what you can do is, right, first things first, this is why a lender comes into place that's very savvy, right? There's different buy down programs, right? And what I mean by buy down program, the first one is, right, a 3-2-1 buy down, right? So a 3-2-1 buy down. Now this is structured with the lender that I work with closely, so I can provide this example. Will you have this example? Maybe, maybe not, but you won't know unless you get with a lender that can have different options for you. So what happens is, you save 3% on the first year for the interest rate, right? The second year, you save 2% on what the current interest rate is, or the third year, you only save 1%, right? But Dustin, won't you be paying the normal interest rate after the third year? Well, what you do after the third year, because interest rates aren't gonna stay high, at the third year, you refinance your loan into a lower interest rate, which is projected to be lower than what we have now, right? Now, what does it take to do this, right? It takes money from the seller, right? So what that means is, when you negotiate your contract with a home you like, right, you get your real estate agent to submit an offer. What you do is you ask for seller concessions, right? Seller concessions from the seller so you can buy down your interest rate. So if you ask for $20,000, and again, you have to get with your lender to figure out the structure of what you can do specifically. If you had 20 grand that you want to ask for from the seller, instead of having it help out your closing cost, you can apply it towards paying down the interest on your mortgage payment. In essence, creating the opportunity to where you don't have to pay today's high interest rates. Now, the structure of it is depending upon you and your lender, but this is a scenario that could work for you, right? So that's why it's very important to get with a lender. There's another option, right? There's a 2-1 interest rate buy down, right? So you save 2% the first year, and then you only save 1% the next year, right? So if you have today's market, 7% interest rate on a 3-2-1 buy down, 7, 6, 5, 4, 4%. You pay the first year, 5%. You pay the second year, 6%. You pay the third year, and then theoretically, the interest rate should be lower than 7%, so you can refinance, right? So if this doesn't make sense, comment in the comment section below, and I'll help you out with it. So very simple. How do you avoid paying today's high interest rates in today's market? Well, you negotiate closing costs from the seller for you to pay down your interest rate and buy you enough time to refinance at a later date on a lower interest rate. If this doesn't make sense to you, let me know in the comment section below. We're gonna stay on top of the real estate market because we're gonna be 100% in any way, shape, or form. Thanks, guys.